Another video news bulletin from the Wealth Vault, the preeminent membership club for alternative investment programs and private cash flow opportunities. Our mission is simple: to help you make, manage, and multiply money in uncommon and extraordinary ways. Now, stay tuned for the latest news.
Holy mother of price movement Mary. My goodness, look at that price of gold. Now you might think, looking at that big swing up from the bottom start of '01 to now, that you are missing out on something. But I'm going to take the role here of the grounded, non-apocalyptic, non-religious, non-ideological driven man to tell you that you're probably not. And here's what I'm telling you. You know, the way I see it, gold above 1,000 can't really be used to rationalize anything other than speculation. Assuming, and here's a caveat, assuming that is you don't already have some stored away to be used as insurance. And that, to me, is really the correct purpose. Just know that it's a hedge against inflation, but it won't pay a premium to it. It'll track inflation, but it won't give you a premium over it. One of the things that I'm always sort of miffed about is the idea that people still think that gold is an investment. It's actually not, and I want to give you a URL because we created a blog post in May of 2011 called Critical Thinking on Gold, Money, and Currencies for a Reason. And at the bottom of this post, there are links to articles that I highly recommend you take a look at. One I have up right here is a video. You don't hedge stocks with gold. It busts the myth that gold is a hedge against market downturns. Believe it or not, gold is not a hedge against market downturns, not equity market downturns. You can get that video right here. And again, that is lwlurl.com/gold. You know, Peter Brandt, famous commodity trader, put it this way. He said, speculators trade price and price alone. Falling in love with an underlying asset represented by price and price only is a fool's game. So what he's not saying, though, he's not saying speculation's bad. He's saying that diehard speculators, he's saying that basically if you think a dormant commodity that has zero growth potential outside of price, meaning gold, is an investment, you're barking up the wrong tree. And the way I like to look at this is through an example. A gun, just like a bar of gold, is inert. It's passive. You have to do something with the gun to create value. And just like gold, it shouldn't be seen anything other than an insurance policy you hope to never use. Well, an insurance policy against what? Well, that's where I highly encourage you to read this blog post off of our wealthvault.net domain, Critical Thinking on Gold, Money, and Currencies. lwlurl.com/gold is a vanity link that will get you over there and to that post. And I highly encourage you to check some of those articles out. So what do we have here? Wow, we've got a market I wouldn't touch. Number one, you can see it's wrestling with this channel here. Number two, so the bottom of the rising channel is being put to a strong test, and whether it bounces back up, hits 2,000, you know, at this point, it's kind of like, why worry about it? Because, you know, if the price tumbles, let's just say, for instance, let me give you an example here. The longer ago you bought gold, the greater the chance you'll have that you might still get a return. I'm going to say it again. The longer ago you bought gold, the greater the chance you'll have that you still might get a return. Why? Because historically, it's out of whack. And typically markets that are price movement based out of whack tend to get back in whack or back in balance. So let's just say it goes down to $1,000 an ounce again, and you bought it just under 1,000 as an example, or just over. Your returns are teetering pretty much on break even. Just take figure out why you're in this market if you are, why you might be enamored by it. Is it because there's a gold rush Alaska on TV and the Travel Channel or Discovery Channel? What is it that has you enamored with that market, that market that could be hitting a bubble any day, any time, any month? And why are you in it? If it's about trading price movement, does gold have to be the market? What is it about stocks, for instance, that are different from, say, an inert commodity? Companies that produce profits that are paid out as either income in the form of dividends or reinvested and compounded. Lots to think about here. I just wanted to start our YouTube channel off. It's been kind of, speaking of inert and dormant, like gold, it has been sort of inert and dormant. So anyway, a quick end of 2012 video on Just the Facts, ma'am. Joe Friday saying, look where we got going on here. Fibonacci number 1, it hit it. As soon as it hit the that point, it started retracing, and now it's testing. Oh, do I want to go below the channel or stay in the channel? My theory is that we're going to go below the channel and stay there. That's my prediction due to a lot of things which I will not get into on this video. Until next time, over and out. Check out the URL, lwlurl.com/gold.
Not a Wealth Vault member yet? Simply go to wealthvault.net/YouTube for a special gift.